Time for First Call, when the BNN Bloomberg viewer gets an opportunity to put a question directly to an investing professional. Here comes an email from our viewer, Andre. Andre writes as follows: would you be a buyer of Meta at this price? Thank you. We'll put up a graph of Meta to show where that price is right now. Jeff?
Meta is an interesting one, actually. It had a 20-day run recently, which is unheard of for big tech, but it has pulled back. With everything going on right now with Trump and tariff tirades and April 2nd around the corner for kind of seeing where he's going to place those global trades, having cash on the sidelines isn't so bad, but Meta as a company is a great business, especially because of things like tariffs. It's not delivering a physical product across a border. It's not to worry about the cost of fuel. Are they going to get stopped at the border? What's the tariff going to be? It's just in the cloud. So that whole social network aspect of it, it can really take advantage of things like the tariff situation, but also if we go into a recession because of that. Again, more people at home, they're just communicating with friends, et cetera, just like back 5 years ago in COVID, just like potentially now, similar kind of situation. And also it's a great business in the sense that, in 2012, Zuckerberg bought Instagram for $1 billion, which seemed like a complete overpay. But last April of last year, they actually valued that portion of Meta, the Instagram portion, at $500 billion. So it just shows that they do some interesting things capital-wise, but again, interesting business. I like the business, but again, it's really up to the investor and their financial advisor. What's the right price for them? Does it fit with their portfolio? But always buy anything at a discount. Be patient, and if you are going to enter something, it's okay to enter it in bite-sized pieces. You don't have to go all in right away on any business. Take your time. Be patient.
Okay, I can tell you, Andre, the analyst community is overwhelmingly positive on Meta at this share price. There are a total of 80 analysts, 80 analysts who cover the stock. 71 of 80 say buy on Meta. Here comes another email. This one comes from Ryan in Toronto. Could I please get your guest's opinion on the ETF MGK? It's the Vanguard Mega Cap Growth Index Fund.
Okay, first of all, it's great you're looking at the U.S. market. And that's one thing to also keep in mind, too. People are terrified of what Trump could do to any country around the world. But when you're investing in the U.S., he is a bully, but he's actually your bully fighting for you, not against you, because you're invested inside the U.S., where, again, his goal is to reduce taxes, reduce regulation, reduce headaches, hassles, and tariffs to get to other countries, as an example. So it's an interesting one. That one has a total of about 73 different holdings in it. It is not an equal-weighted index, which means it's not a dollar in each of those companies. It actually goes based on market cap. So the largest holding there would be Apple, as an example. Then you start to get down to Microsoft, NVIDIA, and then each piece gets smaller and smaller as you get lower on the totem pole there. But it means that they're loaded up on some of the bigger tech companies up front. Overall, it's not a bad idea when you're looking at an index in the sense you get immediate diversification. But I really like the fact that you're looking in the U.S. and you're taking advantage of a market rather than be worried about all the things outside the U.S. border and all the tariff tirades and tornadoes. By going in the U.S., you almost have, again, them protecting you from some of those as well. But overall, that's a decent one. Again, talk to your financial advisor to decide whether that's the right one for you. But overall, at least it's one that's also very focused. Too many indexes have 500 holdings or 1,000 holdings. The fact this one is a little bit more concentrated means they're buying some of the best companies out there, not just one of everything club and throwing spaghetti at the wall to see what sticks.
Thanks for that question. Let's go to the phones for the first time in this segment. Craig is in Etobicoke. Hi, Craig, and thank you for your call.
Yeah, good morning, guys. Happy Friday. Jeff, I wanted to ask you about UK and European banks. I own Lloyds and Ing, and much to my surprise, these things have run up pretty substantially in the last little while. We're 2-3 months into the year, and there's some pretty big gains already. Are these worth a hold, and is there more of a run in these this year, or is this one of those sharp bounces that's going to be followed by a pretty sharp sell-off, or reduction in price? Let me say.
Right, yeah, that's the $1 million question. Again, it depends when you bought it at what price, because keep in mind too, if you've been in long term and had a nice gain, you're also a bit of a tax hostage sometime, where if you're going to sell something, the capital gains tax in itself is a decision factor with that. But overall, European banks, I'd be a little bit careful. There's the good ones, the best, and then there's kind of the rest. It sounds like you picked a couple of the good ones out there as an example. You've got Netherlands-based ING, you've got Lloyds, which has a steep and deep history. But overall, there are some headwinds coming to businesses because of all these tariff issues. So just be a little bit careful. Keep your hand on the pulse of these businesses as far as the banks. But overall, banking can be a great business, but be prepared to pivot if you need to get into other areas, just in case dark storm clouds come for either of those banks as an example.
Okay, thanks for that question. Let's go to back to the email inbox. Mike has written us a question. Could I please get your guest's opinion on Nestle?
Nestle is actually another interesting business. So Nestle is a company that controls a massive sum of food. They're the #1 company out there hunting down any bubbling spring water coming out of the ground anywhere in Europe and in North America. They're pretty much buying it and putting a padlock on it. This is an interesting, dominant business. Again, it's a Swiss company, so it has some different tax advantages in that. But really, less than 2% of their global sales is actually in Switzerland. They sell over 18% of their products in China. Is it more of a Swiss company or more of a Chinese company? So it's one of these companies that has a global reach. It does earn its money in all forms of currency around the globe. They could have some tariff worries, but often food sometimes is able to circumvent certain rules with tariffs. But overall, it's a well-run business. It's an enormous business with great success, whether it's confectionery products, bottled water, other food products. It's a great business overall. And it also pays a fairly rich dividend as well, which is also nice.
Jeff, I want to thank you once again.